Hi there, and welcome to Turbo Finance, your guide to financial success. Today we're diving into one of the most requested topics for freelancers, gig workers, and anyone whose monthly income isn't exactly consistent. How to budget with an irregular income. Budgeting when your paycheck looks different every month might sound impossible, but with a few smart strategies, you can absolutely take control of your finances. Whether you drive for a rideshare service, take on freelance design gigs, or run your own small business, these tips will help you create stability, reduce stress, and grow your financial confidence. Let's get right into it. Step 1. Know your baseline monthly expenses. Before you even think about budgeting, you need to know one crucial number: your baseline monthly expenses. This is the amount you absolutely need each month to keep the lights on and food on the table. We're talking about rent or mortgage, utilities, electricity, water, internet, groceries, transportation, gas, bus fare, car maintenance, insurance, health, car, etc., and minimum loan or debt payments. This is your survival number, the minimum you need to cover essential living expenses. Knowing this figure gives you a target to aim for each month, even when your income is unpredictable. Let's say your baseline comes to $1,800 a month. That's the first chunk of every month's income you want to secure before you spend anything else. Step 2. Calculate your average monthly income. Now that you know what you need, let's look at what you can earn. This step is about figuring out your average monthly income over a period of time. Go back 6 to 12 months and add up all the money you've brought in from your various income sources. Freelance work, gigs, side hustles, tips, commissions, everything. Then divide that number by the number of months you've tracked. For example, if you earned $24,000 over the last 12 months, your average monthly income is $2,000. This is your planning number. It's not based on your best month or worst month, but gives you a realistic base to work from. Important tip: always be conservative. If your income swings between $1,500 and $3,000, budget around the lower end, in this case, $1,500 to stay safe. It's better to be pleasantly surprised than caught off guard. Step 3. Use a priority-based or zero-based budgeting method. When your income is inconsistent, you want a budget that's flexible but firm on priorities. That's where the zero-based budget comes in handy. With this method, you assign every dollar a job, starting with your essentials. List your expenses in order of importance. For example, housing, utilities, groceries, insurance, transportation, minimum debt payments. Once your needs are met, then and only then can you allocate money towards savings, debt repayment, or non-essential spending like dining out, subscriptions, and shopping. Say you bring in $2,000 this month. Based on your budget priorities, $1,800 goes toward essentials, your baseline. $100 goes to savings. $100 goes to fun, wants, or extra debt payment. If you make more next month, great, but this method ensures that when you earn less, the essentials are always covered first. Be sure to check out our video on budgeting methods, where we break down the 7 effective budgeting methods to maintain your finances. Step 4. Create a buffer fund, also known as an income smoothing fund. This step is your safety net. During high-earning months, don't splurge. Instead, set aside a portion of that extra income in a separate buffer account, a fund specifically for covering lean months. This is called income smoothing. Think of it as building your own paycheck. On months when you earn less than usual, you dip into your buffer fund to bring your income up to that average or baseline level. Aim to save at least 1 month of baseline expenses in your buffer, then build up 2 or even 3. For example, if your baseline is $1,800, work toward having $5,400 in your buffer fund. That way, if you have a slow couple of months, you're covered. Step 5. Budget based on the money you actually have. This is a big mindset shift. With irregular income, you should only budget money that is already in your account, not money you think you'll earn next week or next month. For example, if it's the first of the month and you have $1,500 in your account, then that's the amount you budget. You don't include the $500 client payment that's on the way. This cash-in-hand budgeting keeps you grounded in reality and prevents you from overspending or relying on income that might be delayed. Step number 6. Track every expense diligently. This part might not be glorious, but it's critical. With variable income, tracking your expenses helps you stay on top of your spending and avoid those "where did my money go" moments. Use budgeting tools like YNAB, You Need a Budget, Mint, Good Budget, a good old Excel or Google spreadsheet. The key is to categorize your spending and review it weekly. Did you spend more on eating out than planned? Is your grocery bill creeping up? The more you are aware, the more you can adjust. Step number 7. Plan for irregular and annual expenses. Don't get caught off guard by one-time or annual bills like car registration, holiday gifts, or tax payments. These expenses feel like emergencies if you don't plan for them. Break them down into monthly sinking funds. Car maintenance, $600 a year equals $50 a month. Holiday gifts, $500 a year equals $42 a month. Taxes. Estimate your quarterly or annual tax liability and save for it monthly. This way you're not scrambling or dipping into your emergency fund every time a non-monthly expense pops up. Step 8. Build a bigger emergency fund. Everyone needs an emergency fund, but for freelancers and gig workers, it's even more crucial. Why? Because you don't have employer benefits or paid sick leave. If you can't work, you don't earn. Your emergency fund should ideally cover 4 to 6 months of baseline expenses. Yes, it might take time to build up, but start small. Even $25 or $50 a month adds up over time. Keep this fund separate from your income buffer, so you're not tempted to use it unless it's a true emergency. Step number 9. Diversify your income streams. When you depend on just one client or one app for all your income, you're putting yourself at risk. If that source dries up, so does your income. Diversifying your gigs or income sources gives you financial stability. Think about adding a retainer client, creating digital products, taking on coaching or consulting, driving for multiple gig apps, selling services on different platforms. More income streams equals less pressure on each one and more consistency overall. Step 10. Be flexible. Review often. A static budget won't work for a dynamic income. That's why you need to check in regularly. Look over your income, spending, and savings goals at least once a month. Ask yourself, did I hit my target income? Where did I overspend? Can I increase my buffer fund this month? Did I stay under budget for non-essentials? As we always say in our videos, the goal isn't perfection, it's progress and awareness. Be flexible and adjust as needed. Bonus tip, pay yourself a salary. Once you build up a solid buffer and you know your average income, consider paying yourself a consistent monthly salary from your buffer or business account. For example, if your income swings between $1,500 and $3,500 monthly, you could pay yourself $2,200 per month. On good months, any extra stays in the buffer. On slower months, you draw from the buffer to maintain that salary. This strategy mimics a traditional paycheck and makes budgeting way easier. Final thoughts. Budgeting with an irregular income isn't easy, but it's 100% doable with the right mindset and tools. It all starts with knowing your numbers, building a safety net, and staying intentional with every dollar. So whether you're a freelancer, rideshare driver, artist, or entrepreneur, these steps can help you go from paycheck anxiety to financial confidence. Thanks for tuning in to Turbo Finance. If you found this video helpful, hit that like button, subscribe for more real-world money tips, and share your biggest budgeting challenge in the comments below. We'd love to hear from you. Until next time, stay smart, stay focused, and take control of your financial future.